Welcome back to another episode of the Anatomy of the Trade. Today we're going to discuss a couple of trades that I have in Twitter. And it's a very interesting picture here because we have 2 points of entry. The first one is a long-term trade. It's an investment. It's not a swing trade. And the second point of entry was actually a swing trade that I conducted with options. So the first one is cash, and the second one is done in options and in two different portfolios. So we're going to look at both of the trades. And let me start with the history of the first trade. So first, this trade has been done, institutionally. So there is definitely a lot of kind of like back and forth on the actual selection and point of entry, sizing, and so on and so forth. So the first time my attention was drawn to Twitter was in this area right here, and especially with this recovery and overcoming this last bar. This was very evident that this was the last test to the previous kind of like grinding up type of testing that we had since the COVID low. And that was showing a lot of bullishness behind the increase in the demand. So that was my first attempt to open the position here, but for whatever reasons, intra-company reasons, it was not opened at that time. So I only managed to open it later on, like in a month's time. But still, relatively okay entry. We could probably make a lot of judgments about this entry. And especially, considering that this type of drop has come, almost instantly after that. But I think it's just, the ability and the capacity to go through this type of reactions that was really important for this long-term trade to unfold. And as I looked at the PNF horizontal counts, we're definitely looking at some of the targets even above 100. And I think that fundamentally this company should be one of the biggest companies because it's such a huge social platform. So long-term idea really appeals to me here. And then the short-term trade was more of, was in my personal account, was done with options. So I was anticipating a quick move up and, from this point, and that was kind of like a cool trade because this reaction here was somewhat damaging. It had weakness. It had some aggression and threat, to go down. So I thought that just catching it here was a very interesting point of entry. And I did two add-ons here, 1 and 2, on the way up. And then the exit obviously could have been a little bit better. We could have exited somewhere here in this area rather than before the last move up. And I'm done with this trade. That was a really profitable trade. This is what I usually look for in a swing trade. I have two types of swing trades, short-term swing trades, something like this. So this is maybe like under a month or a month. And then the second type of swing trades where maybe I'll open a position here and I'll extend that to 2 or 3 months sometimes. So that's a possibility as well. All right. Well, Franz, what are your first thoughts on these two trades? Give us some pointers here.
Hi, Ramon. Well, first of all, I think the point that you made about your conviction in this particular security is a great lesson that we can all take, because it's the conviction that that you've got in the underlying business that kind of gives you the strength or the fortitude to go through some of the volatility that you're going to experience with any stock. So great, just great lesson for all of us, especially the more long-term oriented we are. Shorter term, it's more just, what's the herd doing and can you figure that out? But having the conviction in this particular position is great. I wonder if you could draw a line across the resistance from the high just before COVID, kind of a horizontal line as well, so we can see what's going on here. And I can see the wheels turning as the kind of the choppy action out of the March lows occurs, and you can see this. There's a lot of, just there's obviously more buying here than there is selling because we're making higher highs and higher lows, but there's still this whole period from March into the June high. There's still some doubters out there, and we don't get quite back to the old high. And then we've got that. I remember the kind of the overall market pullback, the market reaction in June into July, and that's where you said it got your attention, as a long-term trade. So, what do you have there? Well, you've got either a pronounced phase C or even a shakeout and sort of a horizontal structure that sets up beautifully. You've got, your inclination to get in right there as we started to commit above that support line, that horizontal support line that you drew, is kind of where I'd like to enter myself. But as the stock moves up, you can see where your entry was. It was just after a very successful backing up action. If you draw a line across the top of that little trading range, you can see we back up into the top of that, over from about June across to about August, just before your entry, your POE number one.
Mm-hmm.
You can see that backing up action, and then coming out of the backing up action is probably the highest probability entry that you can make. And I'm kind of interested in what your reaction is, or what your observations are after that one significant bar that then corrected really quickly, and then the move kept going. So I'm kind of interested in because this is one of those situations where we were talking about on Tuesday night, where there's not a whole lot of volume. You get the kind of the acceleration, but you don't really have the push behind it. So just kind of interested in what your observations are, what your teaching might be around that.
It's this period is actually not that great in my opinion, just because the demand is so sporadic. So it comes in, and it's only because supply is less than demand in this area, we're still going up. But look at the nature of how we're traveling up. So as you rightfully observed, this bar, it gets us out, and then right away it's being negated. So supply is still present. So we know we're going to be in this texture where we're going to go up, we're going to go down, we're going to go up, we're going to go down. So it's like still vertical absorption, or we're going through this kind of like this type of action where you have to hold on through all of those reactions as the price works through the absorption of whatever supply is remaining. So if you have that type of understanding of the chart at this moment, I think psychologically it's just easier to go through all of those reactions. But also, when you look at the reaction, you have to make a judgment as to what kind of reaction do we have here. And you make that judgment from 2 points of view. The first one is what kind of quality of the supply do we have here? Is supply increasing? Is supply increasing drastically, dramatically? And we don't see a lot of increase of the supply here. So that's positive. And then what about the result of this increase of the supply? Well, the result is such that we didn't break through the support area that was that came before. So that's a positive thing. And then I think this type of action is a little bit hard because as you go through this, you already know you're going to have a reaction. Why? Well, there is really nothing behind the effort. And then we just kind of grinding up here in the upsloping structure. And there is really not a lot of good bars here to the upside. Maybe this one, and it has some supply behind it. This one definitely has some supply behind it. So you expect some kind of reaction where to, well, in the area of the previous support, the severity was big, but whenever you have this vertical absorption type of move up, you're probably going to have a much larger magnitude reaction first before you start going up again. This is just a resolution of this area right here where demand was present, and it's kind of, if I could say, like localized demand, right? So it comes at the specific spots. It doesn't necessarily come, throughout, more gradually. Like right here, they were buyers each day. Here, there are no buyers each day. There is some profit taken here. So this was that resolution. And obviously, again, you look at what? You look at effort. So effort has increased dramatically. And then you look at the result. What is the downward result here? Did we emit below the previous support of the same magnitude? No, we did not. What was the nature of the decline? Well, one bar was really damaging. But then the next follow-through bar is really small, and we still have a relatively high volume signature on that bar. So that suggests presence of the demand, and then you just kind of follow through, right? So you look at the test is great, supply is diminishing, high or low, and then this was another point of entry. And I'm not even sure, maybe we have added here, I would have to go back into the records and just see. But from here, the way how this event unfolds, you still remain bullish. It's still within the context of the rising uptrend. And then the second reaction, and this is a really good question here, like why are we entering there? I mean, isn't this bearish? Well, look at what's happening with these two reactions, reaction number one and reaction number two. Effort is diminishing, which is the effort to the downside. We still have that type of kind of like aggression to the downside. We still have gap, so both of them are analogs as to what is happening. But the difference is that the downward spread is diminishing. The close is better from different perspectives. Close to the spread itself is better because we are rallying up, so we have the tail. Here we are at the bottom of the bar. The gap is smaller. And also the close itself, look at the level of where we're closing on that gap. Much higher than where we closed before, so close higher. And then we're making a higher low. And this distance, I believe that maybe it's a little bit less. So yeah, the distance diminishes. So there are quite a few characteristics that are more bullish than this reaction. And it's kind of counterintuitive. How could we talk about the reaction and the reaction being bullish or bearish? Well, within the context of the uptrend, you're going to have counter reactions to the uptrend. And usually we would say, is this a bearish reaction or is this a bullish reaction? Meaning that if we have a reaction, is it within the context of that uptrend, and is it going to have that bullish characteristics where, yeah, we have spread down, but really nothing damaging. Small spread down, last climactic bar. There is really nothing extraordinary about this reaction right here. So with the same idea, we would go through this. And then this trade here was based on the idea of the vertical absorption. So what is vertical absorption? It is when the price is going up and supply is being presented as a profit taking, as the covering of some of the long positions from weekends, and then right away the supply is being absorbed in the action where it has kind of like this intraday grinding up. Sometimes we call this a feather. Usually after this type of action, we have the increase of the momentum. And for options trade, this was kind of perfect because you anticipate that momentum coming in and increasing, and that's exactly what you want to do with your options. So I started increasing this position size as I was recognizing this feather situation, and that was a really, really good trade. And then in terms of the exit for this trade, I think that, yeah, I could have optimized it a little bit more. I think that, with the market conditions and with this like smaller reactions, although now in the retrospect I'm looking, there's really not a lot of supply. Should have waited and exited probably either on this bar right here or on this one. And I don't know how more optimal this would be in terms of the increase of the premium, probably a little bit more.
What
So I
was
could.
the expiration?
Expiration was a couple of months ago, a couple of months ahead. So I still
Okay.
would have some time on
All
that.
right.
But whenever you see the exit, no matter what your expiration is, I usually just get away. So that's it. That's it for this trade. So Franz, what are your thoughts about the swing trade?
I like it, and I'm looking at one of the terms that we use, which is texture. I'm looking at how the texture changes from the move. Actually, there are three different textures here. That's that first really choppy texture where you were first inclined after the March lows, where you first looking at it. Then the second texture that would go from there up to July. Then we've got this second texture where you entered your cash position that takes us up into that area. And if you look at, and then the third texture clearly is from November to up to the peak. So if you look at just look inside each of those circles and just eyeball how the price moves, it's clearly going from, a very, very choppy action in the first circle to less choppiness in the second circle to, fair, even though there's, you've got a reaction in there, the actual texture itself is much smoother. And we know that volatility is generally a signal that there's supply available. So as we see the volatility gradually diminishing in each of these three circles, we can kind of tell from that supply has been absorbed, and we're going to get this, this nice, once demand presents itself like it does in February, where you got into your option trade, you're definitely going to have that nice move. So
yeah, this is a really good observation by Franz on the texture. It's clearly different way of how the price moves up. So homework for those of you, and I know that our audience in the anatomy of the trade is very devoted to this series because you guys go through the mistakes that we've made and then hopefully apply this to your trading as well. So homework for you is just put on any chart and try to figure out how the texture, or let's say, of the uptrend starts to change. You could do this also for the horizontal trading range. All right, Franz. Well, with this, why don't we just go through the post analysis? And I would say that why don't we do the post analysis on the swing trade? I think it's a little bit too early to do this for the long-term investment. So bias, yes. Timing, yes.
yes, yes,
Yes.
yes,
Yes.
yes,
Yes. Add-on. There
yes,
was an add-on. Yes. So
yes,
exit.
yes. You got 100. You haven't gotten 100 yet. This is your day.
I'm itching, Franz. I mean, like, this is, I don't know. I'm always trying in a good way, guys, in a good way, always trying for perfection. Okay, so for those of you who are thinking about the perfection as the negative word, kind of like, and I totally get this, so let's not even go into this discussion. But okay, all right, let's do 100. Okay, Why
I
not?
mean, what would be your what would be your what would be the logic
There was a
for
mistake here,
whole?
France. Yeah. I mean, like,
Yeah,
look at the supply.
yeah,
Supply
and you
was
know
not
that,
that great here to exit, and the result was not that great either.
and after such a strong momentum move, there's probably going to be some follow through.
Yes. Okay. Thank you. So 50-50. Okay. So it's not 100. It's like 90 something.
Oh, you're so close.
I'm not gonna be even like, I'm gonna say 90%. So in the comments, I think that maybe just that, right? So just again, exit. And lately, I've been actually working a lot. And one might ask, well, what do you do? How do you work on this? Uh, well, you put on the chart and you start. You start simulating your trades, and you work on this on the blind spots that you have, or on some areas that you feel like they are weaker right now relative to other areas of your trade management. So right now I'm working a lot on my exit, meaning that I am simulating the trades and then following the trades until they are logically done, and trying to figure out, the area first where the exit is warranted, and then specific bar or bars where that exit is warranted. So here, I'm not doing the greatest job exiting at the correct time. And also think about the options premium, right? So you always want to, with options, to get on the increasing premium rather than on the decreasing. So that could be considered another type of the mistake. All right, Franz, what are your final thoughts on this episode and trade in general?
Um, I I think it's I think it's a really good trade. We can all learn from it, and it's interesting because I'm more of a long-term oriented investor, and I know you're everything from long-term to even intraday. But I really like the lessons that we can take from this, from whatever our perspective is, and improve our own trading. So
Mhm.
thank you.
All right. Thank you so much, guys. That's it for this episode of the Anatomy of the Trade. And as usual, if you have anything to submit to us and for us to go through, please email us at wyckoff@gmail.com. And thank you very much for all of the comments that you leave under the video.